Hey everybody, I'm coming on to do my part to try to help people understand how to file your taxes for Osceola County if you are a short-term rental owner and you were on Airbnb. So in the state of Florida, you have to pay taxes to the state, and then if you're in Osceola County, you have to pay taxes to the county. So the county taxes make up 6%. And so if you're listed on Airbnb, which I have only one place, is a new place, I listed it on Airbnb, and what I found out is that Airbnb will collect 7.5% taxes that go to the state. The other 6% that has to go to the county, you either have to actively include it in the fees of your listing, otherwise you're going to have to take it out of your pocket after you get paid from Airbnb. So the first thing is, obviously you have to apply for both of the licenses, for your tourist tax through Osceola County and through the state of Florida. And once you do that, you're going to get a form that looks like this, a taxpayer form, and each form has the month of on top, the month where you're going to assign your taxes to each particular month of the year, and it's going to have your individual customer number, and then these are the line items that I'm going to go over to help you file this form, because it is very confusing and sometimes you kind of feel like it takes you a while to get the hang of it. So hopefully what I have learned can help you. So when you're in the Airbnb app, what you're going to do is go under your, well, this is how I did it. Go in your messages. So when you have had, let's say you had 4 guests in June. So that's why this form right here says June, because that is the month where you had your renters. So if you go under your messages that you have with your renters, the chat back and forth, you can click on into their chat, and then you can click on their profile and it says details, and you can see the transaction of how much they paid while they were staying with you. So here's a copy of one of the renters that I had, and so we see that the very first line says nightly rate, right? That's how much they pay per night, and then that's the total of what they pay per night. And then you're also going to see the cleaning fee, which is another amount here, and then you're also going to see the guest services fee, which is another amount here. So you're going to add those 3 amounts up. You're going to not include this one right here, which is the occupancy tax, because you're not going to include a tax in order to pay another tax, right? So that's the one that you don't include. So we're just looking at this as an example, okay? So this person paid $1,345 in nightly fee. They paid $150 in cleaning and $211 guest service fee to Airbnb. So totally, when we add those 3 numbers up, it's going to give us a magic number, and please write this down as I'm going through the example. It's going to help you. It comes up to $1,706.06. So that's your magic number that you're going to go on in order to calculate your taxes, okay? So far, when we look at this tax form, the very first line up here says, let me get my cheat sheet. The very first line says gross rental receipts, okay? Which is line 1, gross rental receipts. So that's what you're going to put, $1,706.06. Per my example, that's going to go in your gross receipts on line 1. So the next line is usually going to be blank unless that renter had a tax exempt status for whatever reason. So now we're moving down to line 3. So line 1 usually is going to equal line 3, which is your taxable rental receipts. Now line 4, that's where you're going to calculate, hey, what is 6% of that $1,706.06? You're going to calculate by multiplying that number by 0.06, right, back in math class, and you're going to get $102.36, okay? So that is 6% of the $1,706.06. So that is your taxes, the 6% taxes that you owe to Osceola County, and that is your line 4, okay? That's your line 4 is $102.36, all right? So line 5 is adjustments. Generally, that's going to be blank. Line 6 is you're bringing down that same amount again, the $102.36 onto line 6, which is the total tax due. Now we get into line 7, which is the less collection allowance. So the collection allowance is a little gift that the county gives us to pay on time. If we pay by the 20th of the month, if we have our taxes, the check or money order, cashier check, however you're going to pay it, if we have it postmarked by the 20th of the month, the county gives us a little incentive, and that is called the collection allowance, all right? So line 7, the collection allowance is 2.5%, all right? It's not much, but you have to include it in there. So you're going to take 2.5% of the taxes that you owe, which is $102.36. So 2.5% of that, which is the same as multiplying it by 0.025, gives you $2.56 as a little gift coming from the state. So that's what you're going to put in line 7 here is the $2.56. Okay, so now line 8 says penalty. It says plus penalty. So here's what you have to know. If you pay after the 20th, then you are going to get charged a penalty. And I think it is actually $50. It's no less than $50. So you either pay before the 20th and get the little gift in the form of a collection allowance, or you're going to get penalized, $50 for not filing on time. Okay, so something else you also have to know. Your taxes are actually due on the 1st. They give you a grace period up until the 20th. So if you go into the post office on the 20th, like I did the first time I filed, and you actually talk to the people at the post office and say, is this going to be postmarked today? And they say yes. And then you find out that you got penalized $50 because it did not get postmarked that day. It got postmarked the next day. Do not trust that the post office is necessarily going to postmark it that day. So what is the lesson learned? Get it in before the 20th. Don't wait on the 20th because you don't know what that post office is going to do once you hand over that payment. So now we're going to move down to line number 9, which is interest. I'm not really sure what that's about. Line number 10 is that same amount that we're bringing down from line number 7, okay, unless you have some penalty that you have to pay or some interest that you have to pay. And so now we're going to find the difference between the amount that we owe and the gift that they're giving us. So $102.36 minus $2.56 gives us a whopping $99.80 that we owe in taxes, which is your line 10 is your amount that you owe minus the collection allowance, all right, line 10. And then line 11, outstanding credits if you have any. Line 12 is an application fee of $5 the very first time you file. You can add that in, only that one time. And so 13 is an insufficient check fee. So these are not going to apply to most of us. So we're going to get down to our last line, which is the total amount due. And that is going to be the $99.80 in this particular example, okay? So a lot of these line items, you're just going to be skipping because it doesn't apply to you. But I just wanted to be sure that I pass on the information that I learned about how to fill this out. And so once you fill it out and once you put your amount at the bottom, your $99.80 for this example, you're going to sign it. You're going to use your check, money order, cashier check, what have you. You're going to drop it in the mail on the 1st all the way through the 18th. And beyond that, you know, you probably are really pushing it with regard to getting there on time because you just never know what's going to happen with the post office. And don't be like me and get penalized because they didn't do what they were supposed to do. So anyway, I hope that was helpful. And you can, apply this to probably other counties and other states, other cities may have similar forms, but I just wanted you to know for Osceola County, Florida, that is how you calculate your tourist development tax, which is 6%, and that's how you apply it to your listing on Airbnb. So I hope that's helpful. Bye.